Austerity for prosperity was the theme for the 2019 much anticipated presentation of the budget by Zimbabwe's new finance minister, Professor Mutule Ncube. It is a budget that has stirred much reaction from members of the general populace asking the question, will Mutulification work for Zimbabwe? Now, before we can get into that, we're just going to have a recap of developments on the stock markets. To discuss that, I'm joined in studio by our very own investment analysts, Anesu and Respect. Gentlemen, good afternoon and welcome to the platform.
Thank you.
Thank you.
Beautiful. Gentlemen, on Monday we saw National Foods having their AGM, Econet deconsolidating, and which saw a plunge on the stock market. We also saw Kafka publishing their results Tuesday. The stock market crashed on Econet. Then we saw on the same day AGM being held by Mikkels. Then Wednesday we saw the stock market recovering. Thursday, presentation of the budget, and on Friday it seems like the stock market seems to be on a recovery path. Gentlemen, your take, Anesu.
Thank you. Generally, from what you've mentioned, Monday had Econet deconsolidate, and then Tuesday the reaction came in, causing the stock market to drop by about 8%, because Econet had taken out about 35% from its share price. And then Kafka also reported that they had 57% growth on their top line to about 30 million.
Okay.
And then we are talking about the AGM on Wednesday. The AGM on Wednesday that happened with Mikkels, okay, if I'm not mistaken. Mm-hmm. That one had a pretty heated discussion in terms of the TB's maturity and its payback from the government. Okay. Between members of the shareholders and also the directorate, also some corporate governance issues that came up, and then we talk about Thursday, much anticipated budget. Okay. That was a hurricane thereabout in the economy, and then today it looks like the market is recovering. It's not a bad week, but then I feel like week on week, we are pretty much on the red end of the stock market.
Okay. Respect?
Yeah, pretty much agree with what Anesu is saying. We began the week on a positive note, driven by inflationary pressures, which is now running for over 3 weeks, successive weeks. And then on Tuesday, we saw the stock market plunging against Econet's deconsolidation. So what happened is we saw investors who had taken out from the dividend debt, which the last dividend debt was on Monday. So investors had to wait on Econet's books up until that day before they had to dispose of the shares. Okay. But this pretty much represented the movement around withdrawal of cassava operations from the group. Okay. And so the stock market plunged with it because Econet is the largest counter on the stock market. Nat Foods had an AGM. They reported that their volumes were up by 27% for the 3 months period to September. Okay. And this was driven by an outperformance in each and every business segment of theirs, which is maize, wheat, flour milling, as well as snacks, and then the stock feeds operation. So all these operations, they performed ahead of their prior year performance. But also last year, that is for the period to June, which is their full year, the company performed very good across a number of its units, except for the stock feeds, which was affected by avian influenza. So they said going into the full year, they expect performance to remain positive. Okay. But they also highlighted a bit of fundamental issues to do with Forex, and okay, they said their performance will be subject to how Forex availability is determined by the central bank. Okay. Yeah. So that's how we saw the stock market perform over the week. Okay. And I think to add on Mikkels' AGM, there were a bit of skirmishes with shareholders raising concerns around treasury bills and their valuations. And there's been a tussle between the government and Mikkels running now into several years. Okay. And Mikkels has failed to classify factually how the level of those TBs on their books. Okay. So there were concerns raised, which is a pure corporate governance issue that has to be addressed at the company, and we also saw a plunge post that same AGM.
Also
And
about 16%.
yeah, sure.
Okay.
So we also saw the stock market coming off a bit before the budget presentation on Thursday. The reason being investors, to me, it showed a bit of optimism on the part of investors where they were expecting some very positive statements from the minister. And now that the market has plunged post the presentation, it also, I mean, the market has recovered post the presentation, which is today. It also shows that risk aversion, where investors try to hedge themselves against the risk associated with the various instruments. So I think from a sentiment perspective, this is a message to the minister that we are a bit skeptical about your policies from an investor side of you. We wait to see how that plays out in successive weeks, but generally that's how I see it.
Okay.
But then also just something I forgot today. Simbisa also had their AGM. They just mentioned a little bit something that I think is very reflective of what could happen here. That they were having a little bit of challenges in their markets within, I think it's Kenya, where they were talking about their cost of doing business having gone up because of fuel prices having gone up as well. So seeing that the budget has said a few sentiments around that area, it's going to be something to really watch out for in terms of business. So, but then generally they're pretty happy with their performance. Their first quarter seems to be way ahead of what they projected, and they're expecting a much better half year coming this January.
Okay, interesting. Progressing. Let's talk about the presentation of the budget. There was a lot of anticipation. People were looking forward to that glimmer, that beacon of light that says, come on, we can do this as Zimbabwe. Did the budget live up to that expectation? Is this the remedy, the antidote to Zimbabwe's economic woes? Respect.
Yeah, I think there are many perspectives to how somebody can look at the budget. But from a general perspective, that is when you put everything together and just see whether it's up or down, whether it's positive or negative. From where I sit, I think it didn't meet my expectations. And what I think is this was not as much a progressive budget, despite attempts by the minister to address certain issues around the budget deficit, also around forex mobilization. I mean, he clearly wanted to rebalance the fiscus, which is what he's going for. But I think what people are easily overlooking is the opportunity cost or the implication of pursuing such policies that he has used to, I mean, achieve those short-term balancing act. So, for example, the minister's budget was pegged at 8 billion, whereas his costs for the year will slightly be above that. But he expects a marginal 5% budget deficit for the year, coming from a budget deficit percentage of about 12%. So I think he will achieve on the very short term balancing his expenditures to revenues or his expenditures to budget. But broadly, I see the impact of revenue manipulation through taxation coming out negatively to far outweigh the benefits that are associated with it. For example, there's going to be inflationary pressure, which is of cost push nature. That's how I see it. Although people are anticipating that possibly we are likely to have demand coming off as people's salaries are crushed, are cut down and so forth. But I don't see that becoming a big factor in determining the pricing models or the pricing levels in the economy. I see the impact of forex, the impact of forex exchange rates worsening, which means easily it's an increase in the cost of commodities on the local market, and the whole issues around how they're planning to mobilize their forex, all that is going to have a negative impact on the pricing. So I see inflation being the real challenge as we move into 2019. Although in the very short term we can say we will achieve a bit of consolidation, our revenues matching out, but when we get into 2019 we'll start to see costs ballooning against the high demand for forex on the parallel market and so forth. But from a positive perspective, there's been effort to mobilize forex through the duty, the duty that has now been the duty on motor vehicles, which is now in USD, that is meant to put in a bit of forex generation on the government side, and also collection of taxation in USD for those who are operating in USD businesses. I think all that is an effort by government to free up a bit of forex resources from I mean, they were utilizing a model where they were taking from what exporters were generating. Okay. So that's an attempt to free up a bit of resources.
Okay, Anisu, the minister during the presentation of the budget said that we could look forward to a downward trend in the levels of inflation. Do you agree with that?
From a professor's point of view, I think that's very much of a massage of figures, so that it could pretty much suit what he would want the economy to reflect. But then from my own point of view, that is very poor. And why? Inflation is not going to come down because forex challenges are still there. And there being a forex challenge, the demand on forex is going to go up because a lot of duty is going to be needed for the duty in USD is going to be needed for those who are going to be trading, importing goods that they want to sell here and so forth. And so I do agree with him that inflation is still going to go up, mainly because of the cost push. With manufacturers, why I would say it's a cost push element? It's because manufacturers don't seem will probably just enjoy a little bit of exemptions in terms of imports in their manufacturing goods and stuff like that. But then when it comes to the luxuries that they are going to be collecting that USD from, it's a very minuscule component of our trade deficit currently. Okay. So with that being said, the revenues that are coming in from that forex from the duty area is going to be very small as compared to what we need to do. What I expected was that the 2% tax was going to help reduce that deficit, but then there was no clarification around what that 2% tax is really going to do, and it's pretty much going to be causing a lot of stress and havoc on someone's pocket as well. So inflation is going to go up, and with the 5% that is expecting to come down to, I don't see it happening. I don't see it happening. And with that being said, it's going to actually pull down his projection of the growth of the economy, because inflation has a very big effect on that. So that's a no-no for me.
He mentioned that perhaps the figure given for the projected growth in the GDP might not be feasible. What's your take?
Yeah, because when you look at what they're projecting now, they're now projecting that the economy will grow by 4% for the current year, from an initial projection of 6.5, which was in itself a revision from 4.5 that was targeted at the beginning of the year. So we are seeing a swerving of the projections, but now they're projecting a 4% growth in the GDP. But also, when you're looking at how inflation has been raging and where inflation is likely to close the year at, according to government, it's likely to close at 25.9, which essentially makes a target of 4% untenable. Mm-hmm. Given that at 5% inflation, they were expecting a GDP growth of 6.5. So now that inflation will go up to 25.9, I mean, the calculation doesn't add up for a growth rate of 4%. So okay. I initially projected a negative growth for the current year, mm-hmm. given the raging inflation. But if you are to use a simple calculation of what it implies for them to, for inflation to be closing at 25.9, according to government's projections, it would give us a a minute growth of 0.7% thereabout. But all this is an implication of inflation rising higher than our production.
Okay.
So that's how I see it. So even going forward, I don't see us attaining these higher growth rates. Is I think in 2013 they are projecting a 3% growth, but against the similar inflationary pressure, I think we are likely to go back into a recession of sort. So this is how I look at it from a growth perspective.
Okay. The minister, when he was appointed in September, he did pledge to eliminate the bond notes. He also pledged that Zimbabwe would join the Rand Monetary Union. But during the presentation of the budget, we see him giving a statement that stands at direct contradistinction to what he had said initially. He said that the multi-currency system was there to stay, perhaps maybe in the short run. We don't know if it's in the long run. Your take on that?
I think
why the discrepancy?
I think for starters, we have to appreciate that monetary matters are not a fiscal matter.
Okay.
So monetary matters, usually they have to be dealt with from a monetary policy perspective, which means this is the purview of the RBZ.
Okay.
So really, Mangudya has to give us a policy direction with that regards. That is in terms of either doing away with the bond note or floating the exchange rate and whatnot. From where I sit, I think I think this statement by Mthuli, when he said it, I think he either said it just before being appointed or when he was just appointed, before he assumed his day-to-day. So there might have been a lack of appreciation of who controls what. Yeah, okay. He has got the influence.
But he's a professor of economics.
Yeah, but that's not the problem here.
Okay.
The problem is his viewpoint was that the bond note doesn't work from an observer's point of view.
Okay.
But now getting into how business is managed within government, it's not his purview. In as much as he would have loved that, and there has been a long-standing issue with regards to us joining the Rand Monetary Union and so forth. Okay. The government has vehemently had a position to say we don't want to join the Rand Monetary Union. So of course he might have proffered some of his views, which he later admitted that he does not still hold. But that's one of the arguments that has been going on online today, since yesterday actually. People saying he should have addressed the issue to do with the currency. The bond note is not equivalent to the local money. But seriously, that has to be addressed by the monetary policy. Okay. But of course, he also mentioned that the monetary policy and the fiscal policy, they work arm in arm. The one buttresses the other. So really, it's just trying to sketch, but also it has to be addressed via the policies of the RBZ.
Okay. The theme was austerity for prosperity. Having taken a look at the budget, do you think that the budget lives up to the theme that was given?
It being austere is very much of an overstatement, I would say. And whose prosperity are we talking about? Food for thought.
Is that not a subjective statement?
It's just food for thought. But anyway, being very practical, I think it is not austere because we are looking at a budget that has actually expanded by about 71%, up to about 8.1 billion.
Okay. Which
I would have expected, since that yes, we've spent that much. Are we agreed?
Okay.
So since we agree on that, we do look at the fact that since we spend that much, there's now a possibility of us spending as much. So probably that's what he's accounting for with that 71% growth. So now, having that in mind, we are going to be finding ourselves in a place where still that budget has not been managed in a proper way, because we have a place where recurrent expenditure is still about close to about 90% of the budget. And that's not going to help us in any way, because the budget was supposed to be something where we would find a lot of recurrent expenditure coming down way further than the 90% that it is occupying of the budget. After having come down from that high figure, then we talk about things like Ministry of Defense, Ministry of Home Affairs. Those are areas that I wouldn't really bank on putting 500 million each. You know,
Okay.
those are areas that probably they should share about 500 million. You know, between the two.
Okay, let's get into the allocations. We're talking about 1.5 billion that has been allocated to education. That's just over a billion that's been given to primary and secondary education. Then we've got about 300 million that's been allocated to the Ministry of Tertiary Education. From there we move on to 989 million that's been allocated for the Ministry of Agriculture. Then we've got about 694 for the Ministry of Health, right? Then we also have just over $500 million for the Ministry of Home Affairs, just over $500 million for the Ministry of Defense and War Veterans Affairs as well. We were also talking about 15 million for Ministry of Mines, 16 million for the Ministry of Energy, and we're also talking about 38 million for the Ministry of Tourism. I mean, the list is interminable, but just this just gives us a broader perspective of what we're talking about here. What's your take on the allocation? Do you think that the allocation reflects the theme that we have as our background, austerity? Is there any sense of austerity whatsoever in what we've seen presented in the allocations?
Yeah, I think the theme of the budget was quite misplaced.
Okay.
Austerity, by definition, it means you are raising income, which is you are raising your revenues, and lowering your expenditure. When you raise your revenue and lower your expenditure, we say you have achieved austerity.
So revenue has been raised 2%
so now
takes.
we raise our revenues, but we are also raising our expenditures to a level which is even far much beyond our revenues. So that becomes not so much of an austerity. It's a model, it's an economic model that has been used elsewhere, and it actually did succeed. But we don't call it austerity. I think austerity is the loose term for it.
Okay.
Others call it debt-friendly fiscalization, or something of that sort.
Okay.
Why? Because so you want to increase your revenues, whereas at the same time you're increasing your expenditure, and by implication you're also increasing what you're likely to get as revenue. Because when people spend more, you also get more in terms of your revenue, and that revenue will offset debt.
Okay.
So that's where the impact is. When you use such kind of model to sort out a crisis, you are freeing up resources to pay debt through increasing your expenditure. But in the austerity, by increasing your revenue. So now on the austerity side, when you increase your revenue and lower your expenditure, it means you are not also likely to grow faster, or you are not likely to generate more in terms of your income. So by implication, you no longer have as much to use to pay your debt. So Zimbabwe is grappled with a debt which is sitting at about 17 billion, and 9 point something of it is local debt. And so you want to be offsetting your debt, and therefore if you are utilizing the model 2, which we said looks at stimulating the stimulating income in a debt-friendly way.
Debt fiscalization.
Yes. So you rather increase expenditure, whereas you are also increasing your income. So this is how this model works like.
Okay.
Also, just looking on the expenditure side, some of the things that he mentioned to be pretty austere, something like one of the things that most of the parliament clapped hands to was a 5% cut on most of the top order ranks of the government. If we look at it, 5% on $1,000 is about $50. So what effect is that really on in terms of being austere? You know, so that $50 cut.
But it's a cut.
But then how many people are going to... Because if we look at the employment costs, they've actually gone up. If we look at the absolute numbers from from one of the tables that he presented within the budget, you'll see that the employment costs around about 4 billion, I think, and. That's not really being austere, because most of what the employees of the government enjoy are what we call benefits and allowances, and that area is what he was supposed to have really looked at and cut down on, and seen how to really reduce on those areas. Because as civil servants, we're looking at people who are getting a very average salary, if they are getting an average salary.
But look here, in as far as the embassies and the commissions are concerned, they were in the last season they received allocation of 65 million, but now he's just cut it down from 65 to 50 million dollars. Isn't that a sense of?
Yeah, I think when you're looking at expenditure cuts, we have to look at them holistically.
Okay.
If we isolate cuts, then what that means is it gives us a wrong picture of whether we managed to achieve overall spending cut. Mm-hmm. So if you had to look at total budget, the total budget is pegged at 8 billion, okay, right? Mm-hmm. Whereas we're coming from 2017 or 2018, where we have almost a similar budget. Mm-hmm. So when you do all your maths in terms of who lost and who got up, you will realize that we are almost at the same position of expenditure. Okay. In fact, we are slightly above the prior year. Okay. So whether you cut A or B and B or C, sometimes it might not matter. It only matters when you use two ways of seeing whether your the entities that you forgo are productive or non-productive. Yes. So what now you have to use a measure of checking whether your resources were committed more on the recurrent or more on the capital side. That's the only basis that can tell you whether you're going positively or you're going in the negative direction. So when you look at this ratio in terms of recurrent to capital expenditure, you realize that we now have got more resources being committed on the recurrent expenditure, yes, although we are saying the budget level is constant. So what that means is you have less in terms of your capital expenditure as a function of total expenditure. So what the minister gave was a calculation of capital expenditure as a total of as a fraction of total revenue. So you know that revenue is going up. Okay. So when you then do your calculation based on a higher numerator, you always get a smaller calculation, a smaller result. So that's how he managed to get away with it. But if you really look at the capital commitment for 2017, for 2018 and the one for 2019, that's a decrease of about 1 billion from 4 last year to 3 billion this year. Okay. So that shows you that most of our expenditure is going towards recurrent. Okay. Now, what's recurrent? Your recurrent are your salaries and your whatnot. So whether you change from hand A to hand B does not matter. The fact is that you are still spending either way. But if you change to a hand C, which is able to capitalize, because that's where the problem is. If you put your resources into capital expenditure, it means you are able to generate growth, because this is a productive resource. It's just like you expending on buying yourself a car, and you expending the same money in buying a commuter or minibus. Okay. That is an asset that you have expended on, which will generate you income. This is an asset that you expend for personal pleasures. So on the net, you are worse off. So if you allocate your resources in such a way that capital expenditure receives fairer amount of resources, it means the economy grows at a faster rate than the growth that's induced by mere expenditure. So this is where the problem of allocation comes in. So we have to look exactly which areas which side of the expenditure benefited more. And I think it's clearly the recurrent expenditure, which we are trying to reduce all this while.
Okay. Looking at mining as well as energy.
They received those are some of the key sectors of the economy. But then they received very insignificant.
Yeah,
16 million each,
Yeah.
roughly.
15 million for mining. I think energy. I'm not very sure.
Energy was 16 million.
Was 16.
Yeah,
Yeah.
but if you go, I mean, in line with how Mutuli thinks today at a caucus earlier in the morning, the budget breakfast meeting, he said people want to feel how their tax or where their tax has been utilized on. So that's more like he wants to commit more on things like education and so forth and healthcare, which people can easily relate to. But I don't think I mean, it's important that we prioritize this.
Yes.
But also at the same page, people really need to see a change in the fortunes of the country. And I believe it would have implied that he commits more resources towards capital expenditure and capital areas, or areas that are productive, manufacturing and so forth. So he did a bit, but then he didn't do enough.
Sorry, just to show, just to have a little bit of appreciation on what he said. Just to touch on the education sector, I'm very much appreciative of what he's done in putting as much as 1.5 billion in that sector. That secures our future. But then going to a point where he has pretty much minimalized the tertiary education sector by giving them about 300 million. That is going to, we won't realize a faster return in terms of what education returns to the country, because innovation is the mother of all invention. So if they don't put enough resources into the tertiary education sector, that means innovation isn't going to be really fueled. There's not going to be much growth in that area, and we won't have inventions coming up and the like. So yes, 1.5 was good.
Okay.
But then he could have balanced it out a little bit more.
50-50.
Yes, probably 50-50 or 60-40 towards. But then with primary then escalating maybe later on in the future. Because at the current state, we are not in a place where we need to be dilly-dallying with how the nation needs to grow, especially if they want to achieve that 2030 goal that they have put for themselves.
Fair enough. Have we seen commitment on repaying the debt, the exorbitant debt that Zimbabwe currently has, in the spirit of austerity?
So from this budget, there was an allocation of about 360 million thereabout to debt repayment.
Okay.
I think collectively we are sitting at about 600.
Okay.
600 for both local and domestic. But the first figure that I've given is a breakdown on either side.
Okay.
So what this means is, I mean, these are not resources enough to cover our gap. We have got a 9 billion local debt, and we've got treasury bills of up to 6.3 billion outstanding. And what they are saying is we'll try to engage the market, and we try to lengthen the period of those treasury bills to longer maturities, so that in the very short term we relieve we relieve pressure on the fiscus.
Okay.
I think that the second note of relieving the fiscus is okay, but you remain with debt, whereas you would have had the chance to exhaust that debt. So I was of the appreciation that they will commit more resources towards extinguishing debt, especially the foreign debt. Because we are not likely to unlock any FDI if we don't deal with the foreign debt component. So I don't feel that they've done enough to unlock value in terms of with regards to our debt. At the same rate as last year, it simply means we are almost at the same position again.
Okay. With the multi-currency system there to stay, is there a prospect of us perhaps moving towards the randification of the economy?
I think moving towards randification is not an option to the current government.
Because what I'm asking is because there's been a lot of talk around that.
Yeah. But government
is a good option, but then
private sector and various stakeholders advocating for that.
Yeah, but I think also their argument has always been that the rand is a volatile currency, and also you need to join the Rand Monetary Union, whose conditions we don't presently meet. because they demand certain measures that should be achieved by the country. So we are not yet there, but also I don't believe it's a very fair idea, given that the rand has been volatile and it's more subject to movements in international commodities. I mean, South Africa is a nation endowed with a lot of minerals, and so whenever prices of commodities move, especially platinum and gold, you also find the economy shaking a bit. So I think the USD, of course, it's elusive, but it has provided stability in terms of prices. But right now, I don't think it's much to do about how strong the US dollar is. It's about how principled the nation is in terms of living within its means. Because if we start producing like what we did in 2009 and we grow our economy gradually, I think we can get there. So I don't think this is much a currency debate as it is a discipline debate on the part of government.
Yeah, because I also agree. I like the point of view that you brought in about the rand being very volatile. But then I think I would also like to appreciate where enterprise is coming from, because they are trying to be very much more competitive in the region. So their competitiveness is being affected by the strength of the US dollar. If we are to say we are mainstream US dollar, or we are pretty much the US dollar, we are going to be much less competitive because of the strength of the currency that we would have versus the rest of the guys who are within the region. So on that aspect of them being competitive, it will be very difficult for them if we keep the USD. But appreciating what he said, yes, it's a quandary.
Okay. With the multi-currency system, is the forex on import vehicles justified?
Yeah, I think the rationale behind that, like I explained previously, is it's government trying to mobilize funds so that it relieves pressure on the forex allocation, where they are presently raiding foreign companies as forex. For example, the Rio Zim and whatnot. So they're trying to pool their own resource, and so that they can also pay their outstanding debt and also do business as government. So it's simply government trying to mobilize resources. But on the other end, you just then have to look at the implication to say, of course, they will gain the forex that they need, but of course, the importation of cars will come down. The duty that's supposed to be earned from importation of those vehicles is also going to come down. And we are also going to see its impact on rates as well, where people will have to source the forex on the black market and they'll have to pay a premium for it, and that's also inflationary. So I think it has negative implications, and when you look at it from a cost-benefit analysis, I think the shortfalls far outweigh the benefits. That's what I think. So I think it's also a realization as well on the part of government that these two are not equal. The local money, we also need the USD because we cannot use our local money to pay for stuff out there. So I think we are moving gradually towards the re-dollarization of the economy. But I think they want to make it a phased approach where they try to balance it out and not just push people's monies out of the system like that.
Yeah, just adding a little bit of satirical flesh would be him having a sort of appreciation of how the US is still important in the economy, because he did say that we are still in a multi-currency situation, but with the base currency being the USD. That is somewhat of an acceptance of what the USD is to the country currently, and how
the bond is not at par with the US dollar.
I didn't want to say it, but you said it.
Okay.
So yeah. So those are some of the things that I think are not okay with taxation on import duty payments in USD.
That being said, where will Zimbabwe be 6 months down the line, 1 year down the line, when we then convene for another budget presentation? Where will Zimbabwe be, Anesu?
With how inflationary these taxes are gonna be, we do see, we were having a small discussion earlier on where we appreciated that the inflationary pressure is going to increase because people are going to demand more of the US dollar for them to import and all of that. And that having been done and said, we do see us coming back into a hyperinflationary time again. I think by February, we said February, March, thereabout, we could start talking about looking at shortages in goods or even the rise of prices depending on which comes first. So 6 months down the line, if we stay like this, expenditure of the government is probably going to go out of control. They may not be able to maintain the expenditure that they want to maintain in terms of what they've budgeted. And with that being said, it is not going to be a pretty sight.
But you seem to have a minister who seems to be on a hands-on approach. Yes,
so in concluding, I think
in a year's time, yes.
Yeah, in concluding, I think I mean there is some good to the budget, which of course on the net we believe it's far much outweighed by the. But I think what he has effectively done good is if you are taking off funding of quasi-fiscal activities, command and whatnot, which I'm not really sure that they did, because they allocated almost $1 billion, which is about 900 and something to agric. How much?
989.
Yeah, sure. So you still find government playing in that space, but they said from the statement that they will stop funding those quasi-fiscal activities, and they also said will stop other such operations that they were doing in other sectors as well. Okay. So I think that's a good thing. And they said we will not longer be issuing TBs for the sake of funding those extra activities. So I think stopping the tap in terms of the money supply is a good thing, because it constrains the growth of inflation. But now there are these two types of inflation where we are saying we have a demand pull inflation. So they are solving a demand pull inflation by stopping TBs through having an expenditure that's equated to revenue. So they are now spending enough so that they no longer need to borrow. But at the same time, they've created another inflation, which is cost push, which comes through the gradual increase in prices or cost of production due to importation and whatnot based on the exchange rate. But it's a good thing that money supply will be constrained going forward. Why? Because it stops a lot of mess that has been going on with banks and the general financial sector. So I think that's a positive from the statement. But in concluding, I think 6 months from now, it's a worse off situation. It's of course when you say belt tightening, I think people have to tighten their belts, try to see how they reconfigure their businesses in line with the realities of the day. We are re-dollarizing. You have to keep your costs in match with the exchange rate, which is prevailing. So whichever currency that you are utilizing, trade, somehow you have to peg it at parity with other things, and that's inflationary. But that also keeps you in line with where the market is going and where the country is really going as well, because government is doing the same. So I think 6 months down the line, we are worse off. Government will have to rethink some of these models.
Just a quick one, Anis. So what do you think will be the net effect of the budget on the stock market?
Generally, I think investors are going to continue on the trend that they've been on, which is hedging. Basically because the stock market is the best safe haven that we have in Zimbabwe. Other than that, I don't see much, because Tuli didn't really give us a very clear path as to what he is thinking to do with how he's going to harness more investment within the country. The best thing that I think I would remember is him speeding up the opening of the one-stop shop for investors and reducing the complexity of doing business. So yeah, that's about my remarks around that.
Okay, and that's about it for the show as well. Gentlemen, thank you for being on the platform. Viewers, thank you for being on the show. Let them do what they do, where they do, what they do. When we do what we do, we mean business. From me, your host, Ibn Mabunda, thank you. Adios.